Taiwanese index sitting with cuts of 1%, Hang Seng is down 1.5%, and that is the situation across the Asian markets.
We'll want to get the policy rate to a level where it is, where the real interest rate is positive. We will want to do that.
Morgan Stanley has upgraded Bajaj Auto to an overweight from an equal weight. Despite everything, right, despite that big gap down opening that the SGX was suggesting, this is not a bad outcome at all.
India is doing phenomenally well, I would say. Despite all the bad news, doom and gloom overseas, India continues to do quite well.
With the markets opening up and the Diwali and the holiday season starting, we've had a great start. And the fourth quarter is also looking quite promising.
Second half for rural is the best half. And fortunate the monsoons have been good, support prices seems to be good, infra is opening up. So we are very, very positive.
17,970 was the opening tick on the Nifty. So from that level, there has been a recovery of 120 points on the Nifty.
We are expecting a big revolution in next 10 to 15 years in the sweets market and as well in the savories market.
We have seen cuts of 55 points on the Nifty, but we have not fallen as badly as the SGX Nifty was indicating today.
Well, that was a day so far. It's been a volatile session, but it's been quiet as well. Of course, I can't say the same about stocks, which we will discuss plenty here over the next 60 minutes. I'm Prashant. With me in the studio is my colleague Reema, and joining us from the studio floor is Nigel as always. Guys, hi. Good afternoon. I mean, so the market did see a bit of a dip buying early on. The day's low is the opening level, basically. We are not quite there yet. There was a pullback, which took us to the day's high. The market traded briefly in the green. And then the second leg started on the way down, which is where we are now. 70 points lower, 60 points lower at about the rough 18,000, 18,020 kind of levels. Lack of conviction. I mean, you can have outperformance on big down days when US is down big time, but for the market to be higher in the green on the back of a 3% down day overnight, I mean, that it's happened before, mind you, but it's always been a bit strange. So this is a bit of a neither here nor there kind of a market. Mid caps and small caps are flat to lower. Broader markets are not doing all that well. I mean, declines outnumber advances, not by much. PSU banks are an interesting area. So Bank of India, for example, reported numbers, good set of numbers. The space saw a very good run last 2 weeks. This week, so far, before today, was seeing a bit of a cool-off, but it's picked up again. It's a top-performing sector. And, post-Fed, the secondary reaction is usually important. Usually the secondary reaction is when the first day, the initial reaction, and this has happened before, is when markets rally big time and then you see a dump, second day, third day, etc. This time, we've not seen that. There was initial euphoric move, which got sold into. The market overnight is closed lower. But even then, I think, will there be a continuation or, the market kind of stabilizes? I think that'll be important to watch. In any case, the message from the Fed chair was pretty clear. Rates are headed higher. Pace perhaps will be slower. But then once the rates get to where they need to get, market pricing is above 5% now. They'll perhaps stay there for a bit longer than expected. So that's where we find ourselves at. Here, relatively speaking, even with this 56-60 point cut, there is relative outperformance once again. Reema, hi.
Hi, it's quiet, but we've got the weekly options expiry. So let's see whether there are fireworks towards in the last 1 hour of trade. But it's clearly PSU banks which is topping the chart. The Nifty PSU banking index is up 2.3%, and the earnings have been very strong over there. Prashant referred to Bank of India. There we had the management. They indicated that they've upped the loan growth guidance for this year. They were earlier anticipating an 8 to 10% type of loan growth. Now they're saying conservatively, minimum, it will at least be 12% this year. Very confident on the asset quality. Gross NPA is coming in at a 28-quarter low. UCO Bank's numbers look very solid. That stock is higher by close to about 5-odd%. Even the other in the financial space, M&M Financial Services, MES Financial. So that's clearly the pocket where consensus expectations are very bullish, but the stocks are delivering on that. Indigo Paints is another one. Just came out with numbers, 10 minutes ago, and the stock is currently up 4.5%. Another interesting thing is many of these companies which reported numbers yesterday, the numbers were strong, continues to see follow-on buying and pretty aggressive. Look at Karnataka Bank, 20% upper circuit yesterday. It's followed it up with a 7.5% gain, good volumes. Redington, Varun Beverages, in fact, up for the third day in a row. So you could say that markets are overvalued, etc. But, you know, when the numbers are good, you have seen buying coming through from investors, and then they don't care about the kind of stock run up. Shipbuilders, defense, we've been talking about this. They continue to gain. That's the performance today. If you pull up a week-to-date performance, Mazgaon is up 24%, Garden Reach is up 17%, while Cochin Shipyard too, Nigel, is up close to about 12%. But what have you made of the day so far?
Well, that's right. Rima, I'm just looking at the high of the day. That's at around 18,100 odd. The low of the day was what we did in the first few minutes at around 17,960 odd. So that's the broad band that we have. Now, since its expiry, and in the next 60 minutes or so, that'll play out. I'm looking at the most active strikes today. And 18,050, that's very, very active today. The premium has come down substantially to around 10 rupees or so. But there was some writing being seen out there. On the downside, the 18,000 put, well, that's continued to see a good amount of open risk build up, and that was the key trigger for me. Yesterday, it unwound close to around 2.5 lakh shares odd. Today, we have seen addition non-stop telling you that the bulls, they are in control even on the downside. They're looking to protect the lows of the day. So the levels that we're looking at, the resistance is that around that 18,075 odd. I'm just plugging in the number. The 18,050 calls for a lot of open risk build up and fair bit of writing out there. The premium was around 30-40 rupees at that point of time. So that's why that becomes a bit of a resistance. While on the downside, given the kind of writing we've seen at the 18,000 put, well, the bulls are counting on today's low getting defended. If in case we breach any of these levels, then we could quickly see a 50-60 point move as well. So just keep an eye out on that. Rima.
Okay, let's tell our viewers what we've lined up for you on the show today. The Indian market's holding up better than the Asian peers after a Fed-induced sell-off on Wall Street. The Nifty's off the day's low, still holding above 18,000. The sensex is down close to about 150 points. IT stocks drag. PSU lenders lead the way. A loser in trade, Voltas. Brokerages have downgraded the stock. Some have even trimmed the target prices as the company continues to lose market share. The rationale lined up on the show. In key earnings to track, we'll tell you what to expect from Hero Moto, Britannia and Cipla Q2 numbers on the show. And to discuss the markets in the road ahead at length, our alpha manager for the day, Varun Danga and Charandeep Singh, will join us in just a bit. All this and more in the next 1 hour.
All right, that's the lineup here. How should you position yourself in the last hour of trade? Mitesh Thakur is back with us for exactly that. Mitesh, you were talking about that, that gap area, which has not been filled, right? That this is the 28th to 31st jump that we saw. What would you do? I mean, for now, we are down about 50 points on the Nifty.
I think, Prashant, my belief is that that gap may not get filled because the overall chart setup is still positive. What is worrisome is the fact that on the hourly and the 2 hourly charts, there is signs of profit and tiredness. Also, the indicator setup was quite overbought. So that typically is a setup, which in about 75-80% of cases will give you consolidation, some sideways action. Sorry. The idea should be to try and buy towards the lower end of the range, which is closer to about 17,900, 920, and keep a stop below 17,800. And on the upside, be nimble in taking profits, unless until we see a breakout beyond levels of 18,200 again. So that's the way we'll approach it, but trading with more of long bias. I have a buy on IDFC First Bank. Disclaimer, there's a stock in my long-term portfolio as well, so I hold it. I have interest over there. But on the trading side, it's a buy with a stop below 56 for targets of 60. And Chola Finance is another one. So that's a buy with a stop at about levels of 743 and a target of 775 on the upside.
Okay, all right, Mitesh, we'll keep coming back to you. Get a sip of water as well. Just take care of that cough. Well, let's talk about a few stocks then that are moving around. And Voltas, that's one that's reacting quite violently. Even after its numbers, there was a con call as well. It appears it's pretty much disappointing. Vaistha joins in to run us through all of those details. Vaistha, over to you.
Thank you for that, Nigel. Well, Voltas results were out in the initial part of this week and the numbers have been soft, as you mentioned. Revenues, though, were up by about 5% on year-on-year basis, but margins have been the weak point, which has come in at 5.8%. versus 7.7% in the same quarter of last year. The expectations were at 6.6%. Now, in terms of segmental revenues, the unitary cooling products division revenue saw a marginal growth of 4%, though was lower than the estimates. The segment was impacted by lower consumer sentiment towards discretionary spends in a generally lean quarter that this is. The room AC market share has also lowered to 22.8% for 8 months of the ongoing calendar year versus 24.1% in the initial 6 months of the ongoing calendar year. The management has said that with high cost inventory position and competitive environment that the company is operating in, it will be difficult to achieve double-digit margin in the next 12 to 15 months. Now, in terms of what brokerages have to say, they say that the rising competitive intensity and margin pressures are the key risks in the AC segment. There are a couple of downgrades from the brokerages, which includes the likes of Macquarie, Kotak Institutional Equities, CLSA, BNP Paribas. All of these have the target price in the range of 850 to 900 rupees. There are also some buy ratings on the stock from Citi and Nomura and Jefferies, which are in the range of 1,000 to 1,200 rupees.
Okay, all right, Baista, thanks a lot for that. Well, Deven, coming across to you, Voltas, the market share has slipped a little bit. The street doesn't like it too much. What's your take on the stock?
Yeah, Nigel, good afternoon. Well, on one side, I think the overseas projects and I think the provisioning pertaining to that has dampened the profits for this particular period, and I think also resulted into a loss, in fact, due to provisioning. On the other side, I think the not so good news is about the market share and I think the growth. At the same time, the commodity pressure continues as far as I think the cost aspect is concerned on the margin side. So all in all put together, I think unless the recovery happens smarter, probably I think one will have to wait for a little longer time as I see it. Maybe as I think I would talk it out, I think this particular quarter is a washout quarter as far as the earning and the performance is concerned. Maybe we'll have to look out for the cues somewhere in the February, March 2023 for the better summer and thereafter the growth therein. So till that point of time, I believe that I think stock price might not perform as much as I think one would like it to be.
Devin, talking about poor numbers, the other one I was noticing is Relaxo. And I think the company joins us tomorrow for a chat, but numbers are a complete washout. The margins are down from 16%. I mean, basically, they've almost halved. Profits are down some 65-70%. Do you track this one? And by the way, valuations are almost at 100 times earnings.
Yeah, that's a challenge, Prashant, and I guess I think it is going to be true for many of the companies where the valuations are on a higher side. You don't have the scope for any kind of error as far as I think your business performance is concerned. And for whatever be the reason, though I have not gone through in detail about the numbers, but for whatever be the reasons, I think smallest of the the performance disappointment would possibly, I think, not be very kind as far as I think the market is concerned. I think the stock price will get probably punished. In my viewpoint, I think this is a period wherein most of the companies where I think the valuations have actually gone ahead far in advance for next 2 years. And I think the performance has remained muted. I would think that I think some amount of valuation derating is in place for many of the companies, not talking in particular about Nexo. But the point which I'm trying to say is that many of the companies where the valuations have peaked ahead of time could possibly be the ones I think would be suffering for next couple of quarters till the time I think the price correction takes place.
Okay, the company, even in Q1, it was a disappointing set of earnings from Relaxo. The company was trying to protect its margins at the cost of volume, at the cost of the top line, but now even the margins are giving way if you don't have volumes. So that's clearly hurting, Relaxo footwear this time. But let's talk about Indigo Paints that released its numbers. Revenues are up 23%. Mangalam is here with the fine print. Mangalam.
Well, the revenues of the company are up by 23%. The EBITDA is the one which has actually grown by about 45% for Indigo Paints, and the margins have expanded. And this despite the gross margins remaining flat. And as a result of that, the net profit has actually grown extremely higher. And the net profit is also aided by a 9 crore tax credit versus a tax expense of about 5 crores. So all these things have led to the big boost that we're seeing in the company's EBITDA as well as the net profit. Why is it that the EBITDA is higher despite stable gross margins? That's because the ad spends of the company are lower versus last year. Ad spends as a percentage of sales was 16% last year. Now it's 14.7%. And the reason for that is because last year the IPL was split into two, and the company has a lot of spends during the IPL. They have Dhoni as the brand ambassador as well. So as a result of which they spent a lot more in the second quarter for advertising, and that has come undone this time around. And importantly, the commentary is something that the street likes because the company is saying that now that raw material problems are subsiding and the worst is behind, they will expect to focus on growth going forward. And future focus will be on aggressively increasing growth with expecting much sharper increase in profitability. So these two lines from the management commentary is something that the street likes. These numbers are good, but a large part of that goodness is purely optical.
Okay, thank you very much for that. The stock is now up close to about 12%. Deven, any thoughts on Indigo Paints? And earlier this week, we also had numbers coming in from Kansai and Nerolac. Thoughts on the industry itself?
Well, I would think that the industry per se is having relatively better time, largely because of the fact that the raw material prices have come under control. And at the same time, the demand scenario remains upbeat. So obviously, I think the growth on one side and I think lower cost on the other side is adding into the possibility of companies reporting relatively better performance going forward. So the preference in the pack would be definitely Asian Paint, which continues to be the leader, and I think would dominate the kind of a show, given the sheer size and the volume that also they have. The likes of Indigo could possibly be the next best choice, I think, as I would like to call it. Maybe I think one will have to watch a little bit more carefully about I think how exactly they increase their margins going forward.
Thank you very much, Deven, for that. Do stay on. Need to slip into a very short break. We'll come back and continue talking about the markets. Our Alpha manager for the day, Varun Daga and Charandeep Singh will also join in.